SOFI just wrapped a short trading week, closed under a key Fibonacci level. Insiders trimmed shares around $19, and options traders are stacking bets at 20 and 21, and it all sets up into next week. Welcome back to Fintech Spy, where we don't just trade volatility, we stare at it long enough that it starts staring back. I am not a financial advisor. This is not financial advice. And if you're making real trades based on a parody YouTube segment, we need to schedule a different life meeting. This week isn't loud, it isn't dramatic, it's something worse. It's controlled. It was a short week, volume looked normal, and yet the chart went nowhere, which sounds harmless until you zoom out. We closed under the 20.68 Fibonacci level, and at the previous 2-week low, the weekly is pinned oversold. Insiders converted RSUs and trimmed into strength around 19 and change, and the February 27th options chain is building walls at 20 and 21. Nothing explosive happened, but everything is leaning. And this is not panic energy. This is we're not done yet energy. On the analyst front, we had a reiteration from Matthew Code at Truist with an updated price target of $21, which is interesting because that just so happens to be where the largest call open interest is sitting this week. When analysts reiterate into weakness, it doesn't move price. It creates narrative friction. The street says fair value, and the chart says show me. And right now, price is not showing anyone anything. Now let's talk insiders. On February 19th, the chief risk officer converted RSUs and sold 25,000 shares at 1962. The EVP of borrowing converted RSUs and sold 23,000 at 1962. And on February 20th, the EVP of SIPS trimmed shares at 1887. This isn't scandal or emergency selling, it's routine trimming. But it is happening right at 19. And when insiders trim into a level the market is trying to defend, it doesn't scream collapse. It whispers supply, not loud enough to panic, just loud enough to matter. Now zoom out to the weekly chart. We closed under the 20.68 Fibonacci level, not violently and not with a dramatic flush, just quietly like it was on the schedule. We also closed at the previous 2-week low, which is market code for we didn't improve anything. We just maintain disappointment. The 50 EMA continues drifting lower, and we're approaching the 100 EMA, meaning longer-term averages are slowly descending toward price like disappointed parents walking into a parent-teacher conference. Momentum isn't accelerating lower anymore. It isn't expanding either. It's just hovering in that neutral to heavy zone where sellers don't need urgency. They just need patience. And the stock RSI is still pinned oversold, not visiting, not flirting with the level pinned. At this point, it's leasing the apartment. Every week, traders say it can't stay down here forever, and every week, it replies, watch me. SOFI's weekly chart isn't crashing. It's slowly walking itself down the stairs while maintaining eye contact. And that's what makes this uncomfortable. You don't get capitulation, you don't get a panic low. You get a steady lowering of the floor, and erosion is harder to trade because there's no emotional climax. Just a slow grind that tests conviction one red close at a time. Now drop down to the daily chart, and this is where things get psychologically interesting. Volume hasn't disappeared, participation is still there, but the candle bodies are almost non-existent. We're printing these tiny candles that look less like decisions and more like hesitation. Momentum is compressing tighter and tighter, like it's trying to decide whether to turn around or just quietly go flat. It's not bullish yet. And it's not expanding lower either. It's narrowing. Meanwhile, stock RSI has been oversold and is slowly crawling upward, but not with strength, more like someone climbing out of a basement after realizing they forgot their phone charger. Price is still sitting under the 50, 100, and 200 EMAs. Every major moving average is above us, which isn't structure, it's overhead gravity, and every attempt to push up runs into mechanical resistance. This isn't capitulation. This is price slowly lowering expectations. There's no dramatic flush, no volume spike, no rip the band-aid off moment. Just small candles, small attempts, and small hope. And when price lowers expectations long enough, either sellers get bored or buyers give up. And right now, we haven't seen either. Options expiration is February 27th. The expected move is plus or minus $1.56. And current price is $18.91. On the put side, the largest open interest is at the 20 strike, with about 6.7 thousand contracts. followed by 19 with 5.5 thousand. And on the call side, the largest open interest is at 21 with about 9.5 thousand contracts, followed by 20 with 6.4 thousand. The options market is clustering around $20, like it's a psychological magnet, put stacked just above price and call stacked just above that, creating a tug of war inside a $2 box. If price pushes toward 21, that call cluster becomes fuel. If price stalls under 20, that put open interest becomes gravity. And the implied move basically says we expect motion but not fireworks, which fits the chart perfectly. So here's the real question. Is 19 quietly becoming a base, or is it just the next stare down? Do you think insider trimming here is routine behavior or subtle distribution? And does 20 get reclaimed next week, or does it flip from support to resistance? Drop it below. I want to know where you're leaning. If you enjoy disciplined overanalysis wrapped in high-quality sarcasm, hit like and subscribe. We cover this every week with no hype and no crystal balls, just charts, positioning, and the occasional emotional damage. Right now, SOFI doesn't look explosive. It doesn't look finished. It looks unresolved. The weekly is drifting. The daily is compressing. The options chain is stacked at 20. Insiders trimmed at 19. And something eventually gives. Until it does, remember, we don't predict the market. We spy on it. See you next week.